What's up, YouTube? Welcome back to the channel. First off, I appreciate you being here. We just hit 100 subscribers. So grateful for this opportunity. I appreciate every one of you that subscribed. And if you're watching this and you haven't subscribed yet, hit the subscribe down here. I'm growing this portfolio to $1 million. Today, I wanted to do a deep dive into my meta position, my bullish thesis on it, and why I went long with leaps instead of shares. Today, the portfolio is sitting on 172,600. We actually had an all-time high a couple of weeks ago back on the 7th of 177.6. So the market's been going up and down, kind of trading sideways a little bit for the month. But without further ado, let's dive into meta and why I'm long with leaps. So let's do a deeper dive here into why I went with the deep in a money call option contract instead of just buying shares. I bought a leaps call, which is a deep in the money call that expires more than a year and a half out. So my contract specifically expires on the 21st of January, 2028. So a lot of time for that contract to move my way. And I want to do the math here and show you guys the leverage that you get from leaps and what my position would have looked like if I just bought shares. So on the share side, at the time, I had $32,000 that I was going to invest into Meta. If I invested my $32,400 into Meta on January 17th, which is when I bought the contract, I would have had 53 shares. Instead, I wanted a little bit more leverage because I didn't have much money in the account at the time. And I like leaps. I've traded leaps for a number of years now. Big fan of the leverage that you get from leaps and options in general. So instead, I used that $32,400 and bought a 340 call that expires on the 21st in 2028. And that holds a 93 delta. Delta portion of the option contract represents how much exposure I get to the underlying. So this represents 93 shares that I control, which is around 1.87 times leverage. So if you were to calculate how much exposure I have into Meta through my delta, it's 93 times 607, which is around $56,000. So with my first initial $32,400, I'm able to control $56,000 worth of Meta. And let's break down the contract right here. This is my position, as you guys just saw. I have this contract expiring here in January, and my average cost is $32,400. As you guys saw, my break-even price for Meta is $664. And the most important part here are the Greeks, especially when it comes to an options contract. This is how these things are priced. So my contract has a 93 delta, and theta is also important as well. It has a negative 0.06 theta, which represents time decay. So let's dive a little bit deeper into how do we price an options contract. So we have two things when it comes to options. We have an intrinsic value and we have an extrinsic value. The intrinsic value is the value on the option contract that if you were to exercise that contract, you get it right now. And the way to calculate it is the current price of the underlying minus the strike price, in this case, 606 minus 340, which is my strike price. That gives you $266 of intrinsic value for that contract. So that's around $26,600 in my contract that I have today. An extrinsic value, which is what decays over time, that's constituted of time decay and volatility premium. So in this case, we have that money left from that contract since we calculated the intrinsic value. So this is the formula here again. That's the total premium we had, which was that 32,400 minus the intrinsic value that we just calculated, which is 26,600. So this is $5,100 of extrinsic value that decays over time. But since my contract is so deep in the money, my extrinsic value in this contract is actually really low. So a lot of times whenever you see people get burned in options, is their contracts mostly constituted of extrinsic value, which is time decay and vol premium. So whenever earnings, for example, come around, they get vol crushed because the contract has a lot of implied volatility baked into the price of the contract. And whenever that volatility is realized, then the contract just gets crushed. Not trying to get super into it, but here's how my contract will behave over time. And I'll make myself a little smaller here so you guys can see the whole thing. So as you can see, Meta's trading at 607, which is right in between this line. And let's say we trade sideways all the way up to 2028. I end up losing that $5,400, which is my extrinsic value of the contract like we talked about. But in this case, I really did think Meta is going to rise. I think a lot of people do as well. So our upside is actually much greater than our downside, because in my opinion, Meta is severely undervalued at these prices. So my upside here for Meta in the next couple of years is much greater than my downside. So once we see Meta trading the 750s, trading the 850s, which is a little bit over all-time highs, my contract is going to be worth 20 grand in gains. My contract is going to be worth 21K. As you can see, time decay starts eating at a little bit of my gains here, but it's very, very minimal. And that's the leverage you get with leaps. If I were to just buy shares, my gains would look a lot smaller than this. So that's why I went with leaps. And it's important to understand like the proper allocation to your portfolio as well when it comes to leaps. My portfolio, I usually get a little bit over 20% of my portfolio into leaps. And that's just how I play it. You know, in my opinion, Meta is a great company to be in. This is, of course, not financial advice, but this is just how I play this, my contract, and how it will behave over time. But gains aside, let's talk a little bit more why I'm bullish on Meta. So the sentiment around Meta right now is that they're spending a lot of money on AI infrastructure and they might not realize it. In my opinion, they're already realizing those gains. So first, Meta has more than 3 billion active users on their platforms, and they're investing hundreds of billions of dollars into CapEx for AI. They do not want to miss out on this AI race. And with more than 3 billion users, like I just mentioned, they're going to be able to capitalize with AI so much greater than a lot of these other companies. And that's my bet. And they're also trading at a very low PE ratio right now at around 20. So think about this. The company is growing 22% year over year and is being valued at a 21 PE ratio. Like, this is just nuts in my opinion. There's a big asymmetry there from the PE ratio to the earnings per share growth. And those are the companies that I like to look for. The same thing happened with Google last year. They were trading at a 19 PE ratio and still printing cash every quarter. So the market eventually caught up to Google. They understood the stock, and now Google's doing what they do. They're also doing more than $26 billion in share buybacks for this year. And, you know, I'm always bullish on share buybacks. I'm not necessarily super bullish on dividends. I do think they can spend their money a lot better by doing R&D and research instead of just doing dividends. I'm a fan of share buybacks, but I'm not super crazy about it. And like you can see right here, a 22 current price earnings ratio is just nuts to me. Once we see a multiple expansion here for Meta, once we start trading at the low 30s to mid 30s, we're going to see our market cap grow. We're going to see our stock price growth as well. So in my opinion, this is one of the better bets right now in the market. And I'm bullish, as you guys can tell. And I know they're spending a lot of money in infrastructure for AI. They're printing money. Let's look at their earnings per share. Check out their earnings per share growth. It has almost doubled over the last couple of years. So as you can see, Q3 of 2024, we're actually at $5.92. And then now we're trading closer to that $7 mark. But we saw a very big quarter here, Q4 of 2025, closer to $9 a share. So their earnings per share is growing. Their PE ratio has been compressed just from market sentiment. And these are the opportunities that I like to be in. So this is my thesis on Meta. Let's talk a little bit more about why Bill Ackman also bought Meta. Coincidentally, I actually bought this in January, just like I shared. And then a couple of months later in February, he saw the same opportunity as many people did and eventually bought into Meta in his portfolio, in his hedge fund. So let's break that down. So similar to Microsoft, Bill Ackman owns $2 billion worth of Meta. That constitutes around 10 to 11% of his hedge fund, which is nuts. And he bought at $7.25 per share. I actually bought at $6.07. So I actually beat you, Bill. Sorry. But, you know, he's kind of talking about the same things I'm talking to, of the deeply discounted valuation of trading at a 22 PE ratio. He's got a lot of confidence in Meta's AI strategy and Zuck's pivot towards super intelligence. And with all of their active users, they're able to leverage all of this intelligence and ad infrastructure that they're going to build to monetize on their platform even better. So people come to Meta ads to buy their ads. Everybody's going to rush into Meta to run ads on their platform, and it's going to be extremely profitable for them. And, you know, Meta also has very strong foundations. They make a ton of cash every year. Aside from their AI infrastructure plays, they're also printing money year over year. And like I mentioned as well, the sentiment around Meta right now from the market is that they're spending too much money into AI infrastructure. But like we just talked about, I really don't think that's the problem right now. All of the other Meg 7 players are spending hundreds of billions of dollars over the next 5 years into AI infrastructure. And all of that is going to be monetized through their platform. So shout out to Big Bill over here. He saw a good opportunity, and I'm not the only one that sees this. I'm sure everybody's very bullish on Meta and Microsoft. You know, these things are blatant to everybody. And this is just another story here. I think it's pretty cool that he's buying Meta. So hopefully you guys enjoyed the episode today and my bold thesis on Meta, why I went with leaps. If you enjoyed the video, don't forget to leave a like and subscribe. Let me know in the comments what you think of Meta and what I should do different in my portfolio. We're sitting on 172,600, and I appreciate you being here. We hit 100 subs. The next goal is 1,000. Don't forget to leave a like and subscribe. I'll talk to you guys soon.